Bitcoin is just so much bigger.
Give us an overview of who you are and why you're actually excited about Bitcoin.
Yeah, so I bought the absolute Pico top in 2017. That was my claim to fame. And back then, Coinbase had an extra fee for Aussie dollars. So when I was doing my taxes, I looked at my first buy, and it's above the top candle. Like, you couldn't have bought higher than me if you tried. So that's how I first got in. Bitcoin was the very first asset I ever bought. At that time, so I used to be a civil engineer, and in particular, it's a strange field of civil engineering called geotechnics. So it's everything to do with the ground. Basements, tunnels, foundations, anything where you're digging a very large hole and trying to build a train station, a bridge, something like that. Now, what's really interesting about the geotechnical side is you don't get to put steel and concrete wherever you want. And we've got textbooks telling you how steel and concrete behave. You get what Mother Nature gives you. So there's a lot of risk, there's a lot of probability, and there's a lot of incomplete information. So, you've got a couple of boreholes, 50 mil diameter, and you've got to design an entire train station. So there's a lot of problem solving, and there's no precision. You really have to be ready to deal with uncertainty. And if you design it for clay and you get rock, or you design it for rock and you get clay, you can't do that. You need to have a design that's going to be flexible based on what might happen, because you just don't know. And kind of sounds like markets, doesn't it? Like, things are uncertain. We don't have a lot of information. It's a very complex puzzle. But if your thesis is too structured in the details, it doesn't matter, because the future is going to change, right? At the moment, Trump can send out a tweet and any thesis you had can implode if it was based on a very specific set of circumstances. So for Bitcoin, I fell down the Bitcoin rabbit hole after I lost a bunch of money in the bear market in 2018. Bitcoin clicked for all the reasons, like sound money and, the debt crisis you could see coming and all this stuff. So it clicked for me. But really, the thing that captivated me was markets. I found markets such a fascinating dynamic of human beings making fear and greed-based decisions. And what I realized, that my personal framework, the only constant in markets is humans making decisions. So when you actually overlay that psychological element, suddenly it makes a whole lot of sense. Why does Bitcoin go up? Because people are greedy and they want to hang on to it and buy as many coins as they can. Why do bull markets stop? Because those same greedy people start taking profits and selling too much. While the narrative is there is no top. And I started just looking at all these different dynamics. So it's been a fascinating journey.
Awesome. I love that you started with buying the top. There's this meme of buying the top forever. but now you're trying to not buy the top and buy when it's kind of a lower thing.
Well, I mean, I'm still buying, right? Even at 106. And that's probably one thing that's been quite interesting this cycle. If I go back to 2021, so obviously 2018 was my first cycle. I didn't see a bull market really. I mean, I saw a little one in 2019 where it went from 4K to 14. Not really a bull, but a bit of a insight into what it looks like when it goes up, because I'd only ever seen red candles up to that point. So that was the first time I saw green candles. Hey, this is awesome. But each cycle, 2021, I started feeling like it was expensive at 50K. So I didn't buy too much above 50K. But then when it went back to all-time high, I was like, oh man, it must be wrong. So you restart your buying. And then, of course, we had the 2022 bear market. This cycle, I've actually found myself as a hodler. And I think if you've been in this market for long enough, a cycle or two, you develop a Bitcoiner instinct. And I found that I no longer think it's expensive sooner. So for want of a better term, when we rallied to 73K, I was probably a bit overheated for now, just gut feel. And then once we started pulling back to 50, 55, we got down to 49, I was value, value, value. So my behavior pattern shifted to, ooh, that's a discount, that's a discount, that's a discount. And even up here, once we went to 100K, I was yeah, it's expensive. Pull back to 90, pull back to 85. Now I'm back in. So definitely feeling this acclimatization effect much sooner. And even now, right, we're chopping around 105, 106K. If it pulls back to 95, I think that's value. So I'm acclimatizing to these higher levels much sooner than I did in previous cycles.
And you're also connecting those gut feelings and those things that you're seeing with actual on-chain data, right? You're connecting both kind of where are we? Are people buying? Are people selling? What's the unrealized, I think, loss and profit? I think that's what we are kind of looking at last time. And just for a small I think last time we actually just went really deep into what's on-chain analysis and what
Yep.
can we do with that. So we have the full episode on like 1 hour. So I won't go again deep in the same topic, but just as an explanation for people, there you can go really deep, and maybe you can give us a short overview of why you're looking at on-chain data, because there's so many different things out there. There's like following the M2, there's this power law, there's like stock to flow, there's like that Sailor model, like 21 years, 21 million. It's really fun how everyone kind of comes up with their own kind of structural model.
Totally. Yeah, so a quick summary of, I mean, we're very fortunate in Bitcoin in that we have so much data. We have so much data and it's all transparent. And I usually bucket these, and it's funny, it's like surveying different groups of the Bitcoin economy. You can survey futures traders, you can see open interest, funding rates, volumes. You can look at options, you can see what the options market's pricing in. You can look at ETFs and spot and see where those markets are. But then we also have this connective tissue that connects all the exchanges, connects all the ETFs, all the custodians, and that is Bitcoin. Bitcoin, it's its own network. And really, what is Bitcoin? It's a big append-only spreadsheet. So this spreadsheet is full. This database is full of information about people buying coins, holding onto them for many years, and then selling at tops. It's also full of information of people like me in 2018 buying the top, panic selling the bottom, getting FOMO and buying again at the local high, and then panic selling the next bottom. And like my journey of making all the wrong decisions is full in 2018 and 19. And then from 2019 until now, it's full of all my decisions of just buying and holding. So I've got plenty of UTXOs where it's, some of them have been around for many years. Some of them have been around for a couple of months. Some of them are bought high. Some of them are bought low. All of those UTXOs contain my decisions. And every single Bitcoiner that's out there, all of your coins carry that packet of information of when you bought them, when you sold them, if you're holding them still, where how long have you held it for, all of these dynamics. And then you paint a big picture of how much of the supply hasn't moved in 12 months, how much of the supply, which has been held for 5 years, is currently selling. And these are some of those dynamics, right? So it's a really fascinating field where we can just see all these different subsets of the market. And more often than not, like 99% of the time, they speak the same language. When people are taking lots and lots of profit on the on-chain space, people in futures markets are usually going levered long at the top. So you're like, I've got a lot of sell side from the smart guys. I got a bunch of degenerates going levered long. Yeah, we're probably going to get to a local top soon. So you can start to like hone in. You're not trying to pick the exact predictions and all that stuff. I don't think predicting is worthwhile. But what I can see is every single time we've had this, and this all flagging, it's been overheated. So either this time is different or it's probably overheated, and vice versa to the downside. So it's really just a story about where Bitcoin and the market sentiment is.
And it's super interesting because, like, for me, most people should just DCA and just like dollar cost average, and they will be better off than most people. But it's interesting to look at local tops and seeing kind of where we are at the cycle. If you have kind of a bigger purchase, a big expense coming up. I don't know if you see like, oh, do I move in half a year or do I move in 1 year or 1.5 years and pay the moving costs and paying for new furniture and like having like, I don't know, a 20K expense all of a sudden, where usually my expenses are like 2-3K a month, and this is just 1 month where I probably need like 20K. So I might need to sell some of my savings or get some money otherwise. So I think it's interesting as a Bitcoiner, because it absolutely does make a difference if you hold on to Bitcoin for 1 year longer, because you can be 50% down or 50% up according to the year. So having some kind of feeling and putting that feeling into data with on-chain analysis and those models, there is some real world value there in even not being a trader, like even not being like selling out and then trying to like day trade or anything like that. I think outside of that, it's just like there is some real value just seeing where we are and making kind of decisions from that. Like, oh, if I have the decision of moving next month or in 1 year and 1 month, maybe I'd pick next year, or maybe I'd pick the end of the year. If you have that flexibility to choose where you put the expense in there, that's kind of the most value that I see in like seeing the cycles. Because other than that, I'm just I'm just buying Bitcoin. I'm 100%
Well, look,
in.
there's another layer to it, and like I actually don't write for traders. I don't really care for traders, to be perfectly honest, because it's just not my interest. In many ways, like as a hodler, and if you spend any time on social media and you're trying to follow like what's going on, right? It's really Bitcoin is telling us the story of what it's doing. And I think that's the other way to think about it. I very much write for hodlers. We did a survey a little while back. We actually need to do another one. And we got like, what kind of person are you? Are you a hodler? Are you a trader? You're a finance professional? And our subscriber base is like 95% hodlers. And I'm a hodler, right? I really what a lot of people are looking for is they see all these narratives of, we're going to moon tomorrow, or it's all over and it's dead. And really the data tells you a story of like, okay, here's all the narrative. Here's what's actually going on. So, a big theme this cycle has been, why isn't the price higher? Why is Sailor buying so much and the ETFs buying so much and blah, blah, blah? And why isn't the price higher? And I've written extensively just helping Bitcoiners go, the price, there's two answers to that question. One, the price is higher. We're at $106,000 and we've been here for like a month and a half. The price is higher. And if we compare that to the amount of sell side pressure that's been going on, as you mentioned, there's a lot of OGs where 100,000 was their like stretch target. It's like, I was buying Bitcoin at $100. I wasn't. I wish I was. Other guys are saying, I bought it at $100. We're at 100,000. I can change my life like in a really, really meaningful, big way. And there's just a lot of sell side. So really what if I'm trying to frame up for my audience, it's about understanding that we're actually just a really, really big asset now. And the amount of money that has to come in to move us, to go from 100K to 150 in price, 50% move. Most hodlers have seen 50% moves all the time. They happen up and down. But that's $1 trillion market cap move. So in order to get that $1 trillion market cap move, we probably need several hundred billion in net capital to flow in. So it's very much about just helping people reason about, understand, take all the narrative that floats around on Twitter and just give it like a really data-driven basis. And the way I think about it, I don't want any of my subscribers to ever feel like a deer in the headlights. If the price shoots up 50%, I don't want anyone to be surprised. They should be like, oh, okay, cool, that makes sense. And here's what probably caused that to happen. And if we sell off by 30%, 40%, I don't want people to be like, whoa, I didn't see that coming. If it does sell off, it's like, oh, okay, no, it made sense. There was a lot of sell side. We didn't quite have the demand coming in. I'm not going to sell it. I'm not going to change my behavior. I'm going to keep DCAing away, but at least I understand why the market did what it did. And I had thought through those problems ahead of time. That's very much how I try to write, to just help people reason about what is a very, very complex beast. And we're fortunate to have a stack of information and data to put it all together.
And I think there's this feeling, and I just had Nico from Simply Bitcoin 2 episodes on, and it was fun because he said, oh, this cycle sucks.
This cycle's amazing. I love this cycle. It's been great.
And I think it's kind of like looking at very short term, where I think the first time we hit the 100K was like early December, so about 7 months ago. So that's like, okay, if you look at the last 7 months and you just take the high there, and like the right now is like about like we're about stable at the same level, and we have gone up and down in between. But if you look a little bit outside of that, just like last 1 year, we have gone up, I think I looked at before 70% in the last 12 months, which is amazing. That's over the average CAGR.
And the sharpest drawdown is like 30%. It's like, guys, this is the most robust, serious, institutional sized. This cycle kicks ass, in my opinion. And this is exactly the kind of thing. And I love that there's two different perspectives on it. For me, this cycle has been incredible. And I was actually talking about this the other day. As a Bitcoiner who's been around for a number of cycles, a lot of these guys are saying like, where's the volatility? Where's the thing that I'm used to where it rips to the upside and then sells off and like my emotions are all over the place? They miss that rush. My old man, which is, I don't know if you use that elsewhere in the world, but old man is father. So here in Australia, there's some Aussie slang for you. My old man, I got him in 2020. So he rode the up, and then believe me, he rode the down in 2022, and I heard about it often. When is this number going to go back up, mate? Well, I kept hearing. Now he's very, very happy because he doesn't think about it anymore. Bitcoin is no longer a part of his like day to day. Why is my like portfolio down? He's just watching it slowly grind up, and he feels much more comfortable with it. And if you think about the types of people who are coming on board, we're accessing new pools of capital who they're not accustomed to 50% drawdowns. They might have a 50% drawdown in their assets like 3 or 4 times in their whole investing career, not 3 or 4 times in the last 3 years. So in a way, this cycle is very much a sign of maturation. The fact that we're still like, people can be upset about it, but we're kind of following all of the previous cycles, and we're 100 times bigger. We're 10 times bigger than the previous cycle. The fact that we're following it even remotely the same way, in my opinion, is unbelievable. That's the anomaly. I actually think we should be slower, and I'm surprised that we're moving as quickly as we are. So it's very interesting watching this divergence of opinion. I think it's amazing. This cycle's been fantastic, and it's making so many more people who were not comfortable with Bitcoin comfortable to start bringing serious capital on board.
So you're seeing kind of institutions and bigger money wallets making it less volatile, but also more stable and more safe for people to invest in.
Totally. And I mean, like if you look at the ETFs, there was a big thesis that the ETFs were just going to be, hedge funds jumping in and playing, Ponzi games and whatever, and just, in for a quick buck. And what we've actually seen is that exists. There are definitely hedge funds, but a lot of them are doing like cash and carry arbitrage. So really what they're doing is just adding liquidity and depth on both sides of the books. There is definitely that hedge fund element. But at the same time, when we get drawdowns, and I actually ran the numbers, so here's some stats for you. On a weekly basis, on outflow weeks, when the ETFs see net outflows, the average is about $160 million. So when they have a bad week, 160 million flows out. On the inflow week, it's 780 million, almost 5 times more. So the inflows are 5 times bigger than the outflows on a bad week. So this is not the kind of behavior that you see from people who are just in here for a quick buck. This looks like buy and hold capital, right? People who are allocating to Bitcoin, actually adding it to their portfolio and saying, I'm going to hang on to this. Now, the ETFs are just one sector. We're obviously seeing that in spot markets and various other forms, but very much this maturation phase. And I think, we don't have the kind of Ponzi games that we had in previous cycles. It is a lot more serious capital. There's a lot more allocation rather than traders. Traders are trying to find what else to move to because the crypto industry's just nuked everybody. So that's not giving them their trading rush. We're seeing a bit more of this activity in these treasury companies, and it's actually kind of moving into the equity market as well for Bitcoin equities. But Bitcoin itself, as it gets bigger and grows up, it's going to trade more and more like gold in that sense. And for me, I often talk because gold's my only other holding, really. And the reason that I hold gold is not because it's going to outperform Bitcoin. I know it's not. But it's the same trade. Both are sound money. Bitcoin, that's my longest duration asset. Gold is if I do need to tap capital. You mentioned before, if you have an expensive, suddenly you need 20 grand or something in that ballpark, that's gold for me. It's like my fiat that's not fiat. It's cash that's like there for the next 6 to 12 months. I'm pretty sure it's not going to be down 50%. Bitcoin could be down 30%. I don't want to sell it then. Gold, if it's down 10%, okay, that's fine. I don't mind. So, as we grow up, Bitcoin's going to move more and more into that. Like, I know the value is going to be there. I'm not going to be too worried about where it's going to be in the cycle because it's doing that preservation of capital. So, I think it's fascinating.
I think a lot of people expected with the 100K something similar, and I was one of them actually. Something similar than we saw 2017. And I actually looked it up before. In 2017, we hit on the 2nd of December, the first time, the 10K. And 14 days later, we were at like 18K. So it was just taking a very short amount of time to really rush through the 10K. And now we are 7 months around the 100K, like we went down to 70K, something like that. And I think that the top was 112, I don't know, 110, something like that. which is amazing. But we hadn't had this rush through like, oh, we are almost at 200K. I think a lot of people kind of expected that. And I was also shocked how how little the retail plebs kind of cared for Bitcoin, like those who were not into Bitcoin. When I went to the family gatherings and parties and stuff like that, people were like,
We
oh,
don't
it's
even
100K.
know.
Oh, interesting. Like they really didn't care. In 2017, it felt different. It was my first, like 2017, I wasn't in Bitcoin. I didn't buy anything at all. But still in the school, it came up, oh, Bitcoin, Bitcoin, Bitcoin. So I heard it, even though not being a Bitcoiner. And now I feel like if you're not in Bitcoin, you're not even really hearing about Bitcoin these
Yeah.
days. It's kind of boring at 100K. Why do you think it's the 100K kind of different? And do you also see that the retail crowd is kind of not there as much as it was 2017 and previous
For
cycles?
sure. Oh, absolutely. And I think this is where people need to understand how big Bitcoin is relative to those previous cycles. So to give you a bit of a context, you're absolutely right that like that period from like December to like through December in 2017, it was, 10K to 20K. In the last 30 days, the amount of capital by my estimate that's flowed into Bitcoin over a month, so just 30 days, is about 40 billion. 40 billion is Bitcoin's market cap in May 2017, literally 5 months before, 6 months before it peaked. That's the whole market cap. So just the last 30 days of capital inflows into Bitcoin was everything up till May 2017. If we take the ETFs in total are about 130 billion in AUM. That's the market cap at the end of November. So now we're entering December, just that final wick that you were just talking about. If you take the ETFs and strategy and just add those together, now we are 3 days. The value in the ETFs and in MSTR right now is equivalent to like 2 days before the all-time high in 2017. So if you just take those numbers, 2017 is irrelevant. It's so small by comparison to where we are at the moment. And those ETFs have only been around for 18 months. And Saylor, whilst yes, his balance is like what 592,000 Bitcoin. If you go back to I think October or November 2024, it was like 180,000. So he's added like 60% of his balance just since November. So really, at the end of the day, we can take the last 12 months of accumulation from both of those entities, and that's the whole 2017 market cap, not even capital, because we know that the market cap isn't how many dollars have been invested. There's a liquidity factor there. So I think that's just like a really important reference point to say that Bitcoin is just so much bigger.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.